It's fair to say that 2019 was a better year in financial markets than most people had expected. Double-digit returns across most equity markets and a solid performance in fixed income supported most portfolios. To a large extent, this was driven by the change in US monetary policy. At the end of 2018, the US Federal Reserve was still engaged in hiking interest rates. By the middle part of last year, we'd seen the Fed change tack completely and was beginning to cut interest rates. This provided a supportive backdrop for most financial assets and also raised the possibility of better economic growth going into 2020. Geopolitical concerns have been a feature of the global environment for some time now. The US-Iranian conflict has been bubbling along in the background for the last couple of years, and it's now very much in the forefront, raising concerns about the potential for a broader regional conflict. Our base case at the moment is that we don't expect to see that. We think both sides will try and de-escalate the situation, at least in the short term, even if the medium to long-term issues are still very much with us. When it comes to financial markets, if we did see an escalation in tensions, we'd expect that to be negative for risky assets like equities and potentially result in significantly higher oil prices, particularly if we saw any action to close the Straits of Hormuz. Significantly higher oil prices could have a negative impact on economic growth and inflation. But again, given that our base case is for de-escalation, we'd expect any market volatility related to this to be relatively short-lived. Nonetheless, this is a fluid situation and we continue to monitor it closely. If we can get past the current Middle East crisis, the overall outlook for 2020 looks decent. We don't think it's going to be as good a year as 2019, but the backdrop is pretty good. We could see slightly better economic growth, helped by lower interest rates. Corporate profitability, while not quite as good as it was, is still pretty robust. And although we do see some parts of the market where valuations are a bit stretched, overall, the picture's fairly positive.